So in this video, we're going to talk about one of the biggest headline grabbing stocks of 2025, which is Palantir Technologies. So Palantir Technologies had a huge spike this year. If you look in the past year, they've actually had a couple of pretty big spikes, but overall just huge growth in the past year, up 381%. Now, a few things about them. They had some contracts this year. For instance, in August 2025, they got a major $10 billion contract with the U.S. Army for its software and data solutions. And this contract consolidates 75 existing contracts into a single enterprise agreement. So they also have growing government business over time. So U.S. government revenue growing 53% year over year in Q2 2025. They also have partnerships with Boeing, a partnership that was announced on September 23rd, 2025, which is actually today. And they are going to integrate Palantir's AI-enabled software into Boeing's defense production. They also signed a licensing agreement with Fujitsu to resell its AI platform in Japan and globally, which targets 100 million in joint revenue by 2029. And they've had a few other developments as well, like cybersecurity maturity model certification, some AI progress, and things like that. So their business model, as you can see, is they're a technology company, but they get a lot of major government contracts. So this has led to their price basically spiking over time. They also had some very good reports and guidance this year so far. So if you look at Q2 2025 results on August 4th, 2025, they had revenue hitting $1 billion and EPS of 16 cents, exceeding analyst expectations. And they also significantly raised their full year revenue guidance to around $4.1 billion. So not only did they beat analysts' predictions, they also raised their own guidance for the rest of the year, which those are the two signs you want to look for and recent activity. So now if we look at how they are actually doing through different periods of time over the last few years, obviously past performance doesn't equal future performance, but it's still a good indicator to look at. So if you look at, say, the past 6 months, they're up 88.68%. The past year, 381%. Over the past 5 years, they actually don't have a full, October 2nd, 2020. So they don't actually have entirely the full 5 years yet. So if you have like any sort of model that predicts based on 5 years or it factors that in, it doesn't come up as a company with a full 5-year history yet being public, but they're very, very close and just a few weeks away from actually having a full 5 years of public trading history. But they are still up 1,884% over the last 5 years, which is insane. Most of that growth came from the end of 2024 and throughout 2025. If you compare that with the S&P 500, of course, last 6 months only 15%, past year only 16%, past 5 years only up 101%. Now, the thing about Palantir is they have an extremely high PE ratio. You're getting massive growth, but it comes with a price. It comes with some risk here. Many investors would tell you that they look for a pretty low PE ratio of like 20 or 30 or something like that. In fact, if you look at Warren Buffett's trades, a lot of his are pretty low PE ratios. Theirs is quite the opposite at 606.64. That's insane. It's one of the highest ones that I've seen probably covering stocks ever. So if you look at that, which of course is not the end all be all, and the fact that it has no dividend yield, you are buying this for growth. So this is more of something you would want. You're either taking a chance of hitting the jackpot early and then selling, or you're hoping to get massive growth long term. Maybe you're on the younger side and you have time to let a stock grow before you need to actually start collecting an income from it. Whatever your case may be, you are looking at Palantir as a growth stock specifically. You're not getting any sort of dividends or anything like that. Now, if you look at year over year changes, obviously great. We've already looked at their stock price, as you would imagine. Pretty much everything looks really good year over year. If you look at their balance sheet, they do have about 7 times more assets versus liabilities, which is very good. It's a very good ratio there. Price to book is pretty high, but they are a technology company. So a lot of times the price to book is going to be higher for those types of companies. If you look at return on assets, 9.55% is actually pretty good. It's right in that solid range. Usually something like 10% is considered strong. Return on capital, 11.2%, which is right in the middle of what would be considered a solid return on capital as well. I also like to look at a few things on Robinhood that you do not see on Google Finance. For instance, the last 3 months, which is kind of the equivalent of a quarter of a year. A lot of times it's too soon to look at a company and how they're doing in the past month or the last week or day, of course. But if you look at the past 3 months, you might see a little bit of a change in a trend, or maybe they turn something around. But if you look at the past 3 months, they are up 31%, which is still pretty solid for Palantir. Sometimes the PE ratio is a little different on Robinhood. They calculate it a little bit differently here, but they're both extremely high, still both right around that 600 number. You also have a little bit of information from hedge funds. So what are hedge funds doing? Hedge funds, their entire job as a hedge fund manager is to make the maximum returns possible for their clients and their portfolios. So it's good to look and see what hedge funds are doing. Obviously, not a huge indicator that would help me make or break a decision on a stock, but still interesting to look at here. So hedge funds of Palantir decreased by 2.64 million shares versus Q1. Q2, 97% were selling. Q1, 94% were selling. So many of them may not believe in them long term, or maybe they are taking profits after a pretty sizable jump. Insiders, I don't even really give this much attention, really, because insiders, a lot of times you have a very small number, a small sample size of informative sales from just maybe a couple insiders. But with this one, you do have 14% buy, 86% sell, and in August, you have 2% buy, 98% sell. So you're getting kind of the same trend with both insiders and hedge fund managers right now. Most of them are selling Palantir despite the incredible growth. Another interesting factor with them is analyst ratings. It's always good to get a second or third opinion, maybe to just see like, well, it's very easy to look at a stock and see that massive growth and look at it through rose-tinted glasses and be like, hey, what if this just continues? And even though I'm buying extremely high, this might still keep going up another 300% next year. Well, that's not always how it works. So analyst ratings are a great way to see kind of another side of the story. And they have 29 ratings here from Wall Street, giving them a 62% hold score for Palantir, which is not the greatest sign in the world if you're thinking about getting a stock that's high growth or any stock in general. If you haven't already had some in your portfolio, buying right now, if you're looking at what analysts are saying, they're not advising it. Obviously not financial advice, but that's just what they believe right now. They only have 24% of them buying, and 13.8% say it might be a good time to sell. So not the greatest signs there either. Now, even though they are hitting or exceeding on earnings pretty much every single quarter over the last couple of years, again, not necessarily blowing anything out of the water, although they've had a few pretty nice gaps between what they actually earned and what was expected, and the guidance keeps raising over time as well. But definitely interesting to see how well they've done, but yet analysts, hedge fund managers, and insiders are all either holding or selling, or they are in general. So another thing to look at, so I like to look at an EV to EBITDA ratio, which is just another indicator of like, is this a good price for me to buy this right now? It's not necessarily whether or not I believe in the company. It's about whether or not I believe in the company and it's a good time to buy it. So this is a more of a raw number versus a PE ratio, whereas a PE ratio can kind of be artificially manipulated by different tricks through accounting purposes. So this one, you have a 705.84 EV to EBITDA ratio, which is actually higher than their PE ratio. So if you look at how they rank versus 1,946 companies in the software industry, they are ranked worse than 98.77% of those software companies, which is not the greatest sign. Again, this is just one small indicator, but not the greatest sign. If you look at the forward PEG ratio, another alternative to a typical PE ratio, which actually factors in growth over time rather than just price, earnings, and that's it. So you're looking at a very high PEG ratio as well, according to NASDAQ, a forecast 12-month forward PEG ratio of literally almost 10. Most good companies would have something like around 1 or 2, and again, they have almost a 10. You're talking about literally 5 times what a lot of companies I've been covering this year have had that look like a strong buy. So this is very high. The only other ones I've seen this high are mostly stuff like Tesla. I think maybe SoFi was pretty high as well, but this is a little concerning as far as being a good or bad price to buy into a stock. Now, another thing I like to look at is leadership. So this is kind of something you can't necessarily just put a number on, but the closest thing you can get to with that, with judging a company's leadership, in my opinion, of course, some others will have different opinions, but Palantir, looking at what their employees actually say about them, how do they rate their CEO? How do they rate the work environment? They actually work there, so in my opinion, they have a really good case for determining whether or not a company has good leadership or not. Whereas the old school method, what were you doing to figure out if they have good leadership? Well, you're just judging their decisions. You might, some of these insiders might know the CEO or whatever. You're judging, press conferences. But with this, you have insiders who actually work there. So here you have a 3.6 out of 5-star rating, which is nothing special. Usually anything like around 4 or better is pretty exceptional. But also, you can look at not just a star number here. I think what's actually more telling is only about half of them recommend working here to a friend. You have very mixed reviews of what it's like to work there. Now, their approval of the CEO is a little bit higher, 60%. It's not a overwhelming majority. It's just kind of a slight majority that say they approve of Alex Karp as the CEO. But in my opinion, I'd like to see better numbers across the board for the culture of the company and the approval rating of the leadership here. So this is one of those times where I actually do agree with the majority of analysts on this one. I actually do think they are a hold. And that is because, one, I've seen the massive growth, obviously, over the past year or so. But a lot of that, I think, was these new government contracts. Are they going to get more and more of these contracts? Are they going to get more and more bullish news? Or are they kind of one of these companies that's going to take a massive spike and then just kind of coast for a few years? That's what worries me about Palantir is if I were to buy now, because I don't actually own Palantir right now, if I were to buy now, I would be very worried that this growth is not going to continue, that I already missed the big wave. Now, being the type of company they are, there's a good chance that they will still continue to grow, but it may not grow nearly as much as they have been in the past year. If you are lucky enough to buy them before 2024 or even before the end of 2024, then good on you. You did really well. But what I'm trying to do is figure out, what do we do today in 2025? And to me, if you already have it, I don't think it's worth selling. I think there's a good chance this does continue to grow, and you're very happy with what you've taken. You could even maybe sell off a little bit of it and recoup your initial investment at this point. That way you feel like you're playing with house money and can keep the rest for a long period of time. But if I were a new investor looking to buy Palantir, in my personal opinion, it may not be a good time to buy, just because their price versus earnings versus their EV to EBITDA ratio, all of these different indicators, these small indicators, even what hedge funds, insiders, and analysts are saying, a lot of it points to, well, this may not continue and they may not be able to justify this price long term. They seem to be a good company, but they seem to be very expensive right now to buy in 2025. at least here in the back half of 2025. Again, none of this is financial advice, so your situation may be different. It may make more sense for you to get it.